Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on farm prices and whether or not they're the next bubble. We've got some new data out from the Real Estate Institute which shows the median farm price up 41% in the last year. The median farm price is now $1.8 million. Dairy farm prices are up a third to $4.2 million. Sheep, beef and grazing properties are up between 20 and 40% in the last year. Now it's worth taking these numbers from the REINZ on farm prices with a grain of salt. There aren't big numbers for sales of properties and the medians can be skewed quite easily by the sale of a big property going through or a change in the mix of properties. So you've got to be a little bit careful, but it's clear that farm prices are rising fast. A couple of reasons for that. There is rampant lending growth. That's the only way you can describe it. The banks are going bananas out there in the boondocks, lending hand over fist to farmers. If you look at this chart, which shows lending growth, agribusiness lending growth in the last 10 years or so, you can see it blipped up over 20% just after the year 2000 and has been running at around about 10% plus since then. But in the last 6 months, it has exploded, back over 20% again. This is exactly the sort of lending growth that we saw in the housing market, which has pushed it to unsustainable levels. Are we seeing the same again? Well, let's have a look at some of the fundamentals of farm prices, particularly dairy farm prices, because that's what's driving the market at the moment. Even the sheep and beef and grazing properties that are selling are really proxies for the dairy farm market, because a lot of dairy farmers are now more intensively using their dairy land and then in the winter taking their cows off the property and grazing them out on what used to be sheep and beef farms. And so those farms are selling for quite high prices, but because of the dairy farm boom. And also you've got the conversions going on in sheep and beef. So it's all about dairy, really, that's what's driving the market. Let's have a look then at the New Zealand dollar price of dairy commodities. And you can see here that we had a bit of a blip up in the year 2000 when the currency got down to 38 cents, remember. It was pretty flat through until 2007 and then it exploded with the rise in commodity prices internationally. Basically, dairy farm prices in New Zealand dollars doubled through 2007. Actually, you haven't heard this much around the traps, prices in New Zealand dollars for dairy commodities have actually fallen in the last 6 months or so. And we're now up about 75% on where we were a couple of years ago. Now, lamb prices, however, have almost doubled, and also interest rates have risen quite sharply from around 6% to 9%. So that is a real issue for farmers. Are they paying too much for their land? Is it justified by an increase in commodity prices? We'll see, particularly because farmers have yet to pay the real costs of their greenhouse gases and also the increasing costs in years to come of water resources. Remember, some of these big farms in South Canterbury and the likes are using an enormous amount of water, which they basically don't pay much for at the moment. I'm Bernard Hickey with some musing on farm prices and whether it's the next bubble for interest.co.nz.